So Beeks. I just want to show you. Sorry about this. There's a lot of text in this, but this was an RNS they released, and I looked into it. And I've been aware of them. They're cloud computing crucial to the capital markets and finance. So they basically run all the sort of infrastructure as a service for stock exchanges, and they're only a small company, but I think I'm sure I read somewhere they have now signed the New York Stock Exchange Group, and they're in Johannesburg. But anyway, infrastructure as a service model optimized for low latency private cloud compute, connectivity, and analytics, providing the flexibility to deploy and connect to exchanges, trading venues, and public cloud for a true hybrid cloud experience. Sorry, is there a question before I No, but yeah, I wouldn't buy the dip. I don't, sorry, question, but buy and dip. Don't buy the dip. I mean, when it comes round, so it'll come round. So when you're in profit on the first sort of 3% exposure, it'll come round in a bowl, hopefully, a chart, and then it'll maybe even touch, like Synectics, for example. What you want to do is to catch up at least to 20-day moving average. Come around, it has there actually, or 50-day maybe, and then it'll power back up, and you can see then it'll break previous highs. So you'll see momentum's building. It's not just buying the dip because it's going down. It's like buying a profit warning. Don't buy it because it's just gone down. Buy it because it starts to form. It'll consolidate and starts to form from higher highs, higher lows, and then that at the moment it's just too much of a spike up really. So what I want is literally, but that now for me, what am I up on that? That's a risk-free investment, so over 20%. So I can move my stop loss up. I can't lose on it. So if you can't lose on something, you can only sort of break even, or break even or make a profit. That is the promised land of the investment world, like I said. So once you can't lose on something, wow, just you can hold it, can you? Forever, if you want to. Anyway, so back to Beeks, sorry, Beeks Financial, and just quickly go to the website and show you what they're about. Build, connect, analyze, delivering low latency compute connectivity. So they got all these dedicated servers, but specifically for financial, capital markets, for stock exchanges, all that stuff. Beeks on-demand solutions, trading infrastructure, and this is where they are around the world. You can see this. They got I think one in Chicago, data centers. They are Chicago, New York, Paris, and London. There are Singapore, go away, Tokyo, Hong Kong, Sydney, the data centers there. But yeah, so it's a very interesting company. But I read this RNS. I thought there is definitely more to come here, and I go through it. So this is one of the significant contract wins and trading update. Okay. The signing of a multi-million-dollar, multi-year expansion contract for its proximity cloud offering, and a new win with its exchange cloud offering, and provide an update on a period of continued positive trading momentum for the 6 months. So see there, a continued positive momentum. Having won a number of competitive tenders in H1 full year 24, the company now expects trading for 2025 to be significantly ahead of previous expectations. Already, in the future years, you're going to see that they're ahead, significantly ahead of expectations. Tick inbox. There's 3 parts to this RNS. So first of all, is this contract, 2.3 million proximity cloud expansion contract, following successful deployment of an initial contract with a tier 1 investment manager signed in November for proximity cloud. Beeks fully configured and pre-installed physical trading environment. A new contract has been awarded for additional locations. So that the latest win more than doubles the initial contract's value to 3.6 million in aggregate over 4 years. This is interesting. The company anticipates considerable further expansion. So we've got a contract win, and there's more to come probably, with only approximately 30% of the customer's trading infrastructure currently migrating to proximity cloud, demonstrating the strong growth potential for the offering. And then the Exchange Cloud win, the second part of the RNS, second section, with one of the largest global groups globally. This is the largest exchange, and I believe this is the New York Stock Exchange, because I'm sure I've read a broker note where they've talked about them previously. But the company is also delighted to announce the signing of a conditional contract with one of the largest exchange groups globally for the Exchange Cloud, offering a multi-home, fully configured, pre-installed physical trading environment, fully optimized for global exchanges to offer cloud solutions to their end users. This deal marks the initial phase of an intended multi-year partnership between Beeks and the Exchange, and completion of the contract subject to regulatory. And this is the third major international exchange to sign up to the Exchange Cloud offering, demonstrating the significant potential. So already you've got three major international exchanges signing up to their Exchange Cloud. So that says to me it's a very good offering. It's probably better than competitors, or it's very competitive because it's winning market share. Beeks continues to see a building pipeline of opportunities across Exchange Cloud offerings. So they're seeing even more. And once you've got the big guys on board, the others are going to say, well, they're using Beeks. It's obviously quite good. Let's have a look into it. It gets easier. It's almost like due diligence for other exchanges. You get into the door of other exchanges if you are already supplying three major international exchanges. And this is the update as well. Trading in line has been in line with board position for revenue growth. It's 25%. Again, nice to see over 20% growth, over 25% versus H1, combined with improved margins. So two things there. Top line's growing and the margins are improving. So I just read this and well, I was literally waiting for, I shouldn't do this, but I was waiting for 8 o'clock to buy this. And I knew it was going to gap up, and it did. And I should buy 3 tranches because I couldn't get any volume there. But I don't mind now. I mean, it may come back a little bit, but I'm confident this business is improving. And it's not just we're not talking about hope high potential stock where they've just discovered some oil or some helium or something. We're talking about fundamental, sustainable, valuation re-rate because it's down to contracts and revenue and margins expanding. So in line with strategy, Beeks is now even more positive free cash flow position in the period, with unaudited net cash of 5.5 million, up from 4.4. The board continues to be confident in achieving results full year in line with expectations. So this is to the broken out. You see here, this is in the black is revenue growth, nice revenue growth go up there. You got adjusted EBIT growing and the EBITDA margin then going back up. Obviously, a time for infrastructure here, and then it's going up. This is expect 33% sales and 42% EPS full year from 2023-25 compound annual growth. So that's the revenue, and that's the adjusted EPS. Look at that, really shooting up. Lovely looking chart. These are forecasts, of course, but you can understand it's a significant amount of their contracts are recurring. So once they've landed the contract, the big upfront, they get recurring revenue then. And in fact, this is Beeks in the top decile, expected to earn compound annual growth. This is small and mid caps, software, managed services. See, Sofian just ahead of it. Beeks is second on compound annual growth compared to all the other companies here. You've got Alico there, you've got One Spatial, Darktrace, Access Intelligence, Sage, Aptitude. It's GB Group all the way down there. Look at that. And a high share of contractually recurring revenue compared to UK SMID cap peers. Like I said, 90% pretty much. I mean, the one there, Darktrace, is very high. But nevertheless, if you're above 90%, that's excellent. So just quickly look at this is improving, but quickly look at I've told you what I've added now. What I'm going to like is this, right? In about a month's time, this will be on the website, but it'll look nice on this, and it'll be clickable. In fact, you come from the list of stock scores, and you click on a company, and you come to this. And you can scroll around the website. There's no downloads of spreadsheets. There's no viewing the spreadsheet and scrolling like side to side. It looked nice. What I've included here, what I'm going to do also is this. I'm going to put the broker target in. That's the broker target for Beeks, 60%. All right. That, by the way, that broker target doesn't factor in future contracts or contracts about land or so. In fact, it doesn't even factor in the contract today. I'll have to read the broker note again. But that was, I think they've just raised it a little bit, but they're not factoring in future potential here. So basically on existing contracts. So they're seeing 60% growth. But what I'll do is put a broker target in there, and I'll also put my own forecasts and see how they align. And sometimes, in fact, there's one I'm going to be looking at later, but the broker target does not align with what I think. And so even if I put, very generous multiples on a company, I can't see how the company will reach that broker target price. So So when this goes to the website live, you can see both this. So for example, it does with this. It sort of it works out. So you see top line growth here. Where's the last of figures here? June. Yeah, look at that. Operating cash flow improving 22%. Operating cash flow up 97%. Uh, it's right. EBITDA is fine at the moment. It is turning into like starting to generate free cash flow. So these will fatten out. The E in the P will fatten out. It's not yet profitable. It was not adjusted. I look at the broker focus, and they had them in profit on adjusted figures. I don't know what's all that's about. But it'll be clean next year apparently. Health is good. The momentum, I think that what the 50, I think that'll all be good. Like I said, I give now 60% on a 12-month target. That'll be in the green. It'll be top scores on that because 60% in 12 months is very good. And I think it'll go on to be raised. They asked, the broker did say they're going to raise their guidance probably. But on 12 months, it's a good return. If you can get 60% a year off a company, you do very well. But if you look at the chart on Beeks, look at it. Downtrend, 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 right? Pretty much. It's had a good rise. It's been going quite well from the IPO, 44 pence to 190. It's almost a recovery play, but you realize now they're in proper recovery mode. They're full on growth mode. And this is what I'm saying. The difference between they may have warned a couple of times down here. And wait for it to change. You'll know when it'll change. That'll happen. It may have to come down here. I don't mind. I'm only at 3%. But I just think now what they've released, well, it'll probably hold there. I mean, a big volume day yesterday went up. A couple of sellers taking profit, and it's it's gone down for a while. But I think it'll recover and it'll start going back up, like Synectics did. You have that one big day up, a bit of churn, a couple of short people taking profit, and then you realize it's a good company actually. It's going to get better as well. So yeah, that's what I'm hoping. I hope it'll just find a sort of range here for a while, and then they release their results. If they don't release any contracts before, and it may go up further, hopefully. So anyway, obviously I'm biased on that on this all. Sorry, there's a question here. Sorry, did you buy Beeks today or just prior to the trading update? No, I bought it yesterday, actually on the trading update. I literally jumped in when it was about 20% up. And so, yeah, and I thought it was one of the stocks where I thought that was such a good trading update. I don't know where it's going to go. So I wanted to get my 3% exposure to it. And I'm happy if it just comes, rolls around a bit. But yeah, I wasn't sure how far I was going to go because I started buying it was up 20%. So it was going to come back down, and it didn't. End the day up sort of up, and even today it's come down a bit, and I'm still up like 2% or something. But yeah, I think there's a lot more upside here. It's great. It's just excellent update. Everything seems to be fine. So sales are going up, contracts have been winning, margins are improving, free cash flow is happening. It's what's not like there.